Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Bitcoin has shattered the $65,000 psychological barrier, driven by a sudden geopolitical pivot. The rally follows Donald Trump's announcement of a completed deal with Iran, which guarantees a toll-free opening of the Strait of Hormuz. This resolution of supply chain fears has injected immediate liquidity into digital assets, signaling a rapid repricing of risk premiums. Meanwhile, the equity markets are bracing for a heavy earnings load. Pre-market activity is dominated by reports from CMTL, AIOT, CGC, and CODA. Investors are closely monitoring the technical backdrops for these names, as their sector implications could set the tone for broader market sentiment. Specifically, look for CODA's guidance on capital expenditure, which often signals confidence in the underlying tech infrastructure. On the macro front, the global AI infrastructure narrative is undergoing a structural shift. China's emerging AI token economy is reshaping computing costs and security protocols for over 600 million users. This transition to token-based pricing is not just a local phenomenon, it impacts global infrastructure demand. As Chinese firms optimize costs through this new model, Western competitors face increasing pressure to align their pricing strategies or risk losing market share in the developing world. In related news, tensions within Alphabet continue to surface. Shares of Google rose 0.5% as CEO Sundar Pichai faced a walkout during a Stanford speech. The protest highlighted ongoing friction regarding the $1.2 billion Project Nimbus contract with Israel. While Pichai avoided discussing AI directly, the incident underscores the growing political risks embedded in major tech contracts. This serves as a reminder that geopolitical alignment is now a tangible factor in tech valuations. Looking ahead to the corporate calendar, Dave & Buster's presents a critical case study in leverage. The company faces a staggering $145.7 million interest expense against just $105.1 million in operating income. This negative spread threatens its Q1 FY 2027 earnings report on June 15, 2026. The disparity reveals critical leverage risks that could force strategic pivots or asset sales if cash flow does not improve. Although there are no major economic calendar releases in the next 36 hours, the market is digesting these structural shifts. The absence of macro data means equity flows will be driven entirely by idiosyncratic corporate news and geopolitical developments. Traders are positioning for volatility rather than direction, given the conflicting signals from crypto strength and corporate debt concerns. The interplay between digital asset rallies and traditional equity stress creates a complex trading environment. Bitcoin's surge offers a hedge for some, while others flee to cash amid earnings uncertainty. The China AI shift adds another layer of complexity, suggesting that cost arbitrage will drive future infrastructure investments. Investors must weigh the immediate geopolitical relief in crypto against the long-term structural risks in tech and leisure sectors. The market is pricing in a world where political deals can move assets as quickly as earnings reports. Stay vigilant as these narratives evolve. That's your market briefing. Follow Rumour with AI for daily market intelligence.